Welcome to Wealth Management Mixtape, a go-anywhere show about life, finance, and investing. Join Jake Heisler and Tim Miller as they talk about what they're reading, writing, and experiencing. Jake Heisler and Tim Miller work for Quaker Wealth Management. All opinions expressed by Jake and Tim or any podcast guests are solely their own opinions and do not reflect the opinion of Quaker Wealth Management. This podcast is for informational purposes only and should not be relied upon for investment or financial planning decisions. Clients of Quaker Wealth Management may maintain positions in the securities discussed in this podcast.
I'm getting upset about the Phillies. I can hear it down the hall.
Yeah,
They've won a lot of games, right? Like 11 out of 12 or something?
Something like that.
You can't get upset about one game then.
No, you can't.
If I say they win like 13 out of 15 games ago, you'd be thrilled, right?
I mean, they're making it interesting come the stretch run. That's all you can ask for after a decade of missing the playoffs, right?
What do you think about Noah Syndergaard?
I think he's past. Well, he had Tommy John surgery. He's just not the same pitcher
Right.
he used to be. He's like more of a contact pitcher than anything, and that can go sideways more times than you'd hope for.
He's better than who was our fifth pitcher? We didn't have one, I don't think. I guess it was Eflin before he got hurt.
I think they're looking at him as like if you're playing if you're starting three pitchers in the playoffs, he's going to be your third guy. And I honestly would probably rather have Gibson or Suarez.
Yeah, Suarez has been good.
One of them.
I think.
Yeah.
Anyway, enough about the Phillies. They play the Mets, by the way, this starting tomorrow, right?
Yeah, this weekend, and then this weekend they're in New York, and then next weekend they come to Philadelphia.
That's a big series, right?
Huge.
I got to tell you, last night's win, I was like, I was kind of on the fence. Not on the fence with the Phillies. I'm always going to root for the Phillies, but they showed some heart last night. They were excited about winning, and so that was kind of cool.
Yeah, my buddy texted me, who's always like skeptical of really getting behind the Phillies. He said, "Man, they really lured us all back in after that win. They have like one of those wins every year, and then they crush you at the end of the season. So we'll see what happens."
My over/under on the year was 80. It was 85 games, or something like that. So they're outpacing that now, on track.
I saw a stat that they were 21-29 before they fired Joe Girardi, which is on pace for like 68 wins, and then they're 41-19 since I guess Rob Thompson's come in, and they went from a 68 game win projection to 90 game win projection. Unbelievable.
It's got to be a baseball manager has to be the least impactful leader of a team of all sports, right?
I'd agree with that.
Yeah, I mean, I guess it's just managing personalities.
I think it matters a lot more come playoff time.
Yeah, but really, at the end of the day, baseball's an individual sport. If you perform individually, you're good. I guess it's the same for most sports, but there's more strategy that goes into every other sport, right?
Yeah,
a coach has to be actively involved in. Anyway, I don't know. He's the scapegoat, right? Any coach in baseball is a scapegoat. They fire them. It's because they're trying to spur on the troops or whatever. Spur. I don't know.
It seemed to work. So
anyway, you know what else is less bad? How was this for a segue? CPI.
Right into inflation.
Yeah, Phillies are like CPI. They're less bad now. Yeah, inflation was better. Was less bad. So it came in. I don't even know the numbers. You know the numbers? 8 point something.
I think it was 8.5
versus 8.7 or something.
Versus 8.7.
Slightly under consensus.
And it was a month prior. It was 9.1. Was that right?
All right.
So you're down.
It's still going up.
It's still high, just relative to consensus and relative to the prior month, it's down. So to your point, less bad equals good equals stocks rally on that type of news, which is I mean,
I guess the most important number is month over month, right? It was 0, it was flat.
yeah.
I don't like when I get the idea of core, but when you strip out, core is just regular CPI minus energy and food, I believe. Why strip that out? Like energy and food is like, it's a big component of what people spend money on.
Yeah.
So, and that was 0, the regular old month over month CPI. So it's not better. It's just not increasing anymore, which is good. So, hopeful that there's going to be a negative month in August or September. What do you think?
As far as where we go from here, what happens next month?
Yeah. You call it negative month over month?
I don't know if I'm ready to call it negative. We're getting close.
There's only one way to get better than 0.
Yeah, I guess they do improve. Slightly negative, I guess. You would hope that it improves. You would hope that this trajectory of inflation peaking and rolling over continues every single month, because I think that has a huge impact, obviously, on what the Fed does. That kind of leads into what I guess we're going to be talking about is, what is the Fed going to do? Is it already pricing in 75 basis points? Can they do a 50 and maybe sit back and wait and then do a 25 if they need to? I don't know. Does that, like, what is the market expecting at this point after seeing those CPI numbers?
Right. I think the market's clearly expecting 75 next time. We get to skip a month, which is nice. That's what the Treasury yields would tell you. I don't know. I was talking to another advisor today, and they were saying similar to how I'm thinking, is that right now investors are interpreting everything. They're looking at the positive spin on everything right now. Right? Earnings are pretty good for some tech companies. Maybe it was overdone, this whole recession thing in the beginning, and we'll talk about that in a second, about the recession itself or lack thereof. But it's maybe there is a reason to be positive, right? People were so negative for so long and so fearful of what the Fed was going to do in response to high inflation, that mindset seems to have shifted at least a little bit to people are looking at the bright side of life. That was you're probably too young for Monty Python.
Seen parts of
that
it.
Song. Yeah, the Life of Ted. I can't remember what it's called. No, that's wrong. Life of Brian. That's what it's called. Anyway,
the one thing
if you're 40 and older, you'll understand that.
The one thing I did want to bring up was, like, I was watching, I think his name's Jeremy Siegel. He's like the Wharton School of Business professor who always comes on and shares his thoughts on the economy and kind of more lately his predictions of, he thinks there's going to be a soft landing, but he doesn't. He believes that inflation has peaked, and he wants Jerome Powell. He's urging Jerome Powell to be forward-looking and not look, because he says that it's a lag indicator. A lot of these numbers are lag indicators. So he's saying, be forward-looking. Don't hike as much as you think you need to, because you probably don't need to. But his big argument was that, where are normal rates? Like, how much? We've hiked 2.25 already, more than that, maybe a little bit. But he says, to get to 4%, you probably don't need to go all the way to 4%. You can probably get to 3.25, and then kind of sit back and watch.
Yeah, there's any urgency. I don't know. Again, we talked about this before. Jerry Powell's job. I don't know what. I feel like I could call him Jerry at this point. I mean, he's on TV constantly. He's like a Facebook friend or something. You see constantly, but you never interact with personally. I don't know. I think that whole Federal Reserve is looking at the same data that everybody else is looking at. And they might have internal benchmarks that are a little bit different, but I would agree. Like, it seems like people went overboard with the sell-off initially. And I don't know if it's going to sell off again. I wouldn't be surprised if that happens. We were talking earlier today about stocks. I mean, look, they're up 16% off the lows of mid-June. NASDAQ's up higher than that. The Dow a little bit lower. We're another 13%, I guess maybe 14% after today, but and we're back to the highs of the end of last year. we're not that far off. It seems like people overreacted. This is just my sense. Overreacted, thought earnings were going to be awful. Revisions started going down, but earnings actually were okay. I think earnings are up year over year 5.5%. So it's not inflation. It's not meeting inflation, but it's good. And it's not bad, is my point. And so I think maybe people thought it was going to get worse really fast.
Yeah, I think when you frame it like that we're only 13% off the highs, that glass half empty or glass half full type of perspective, it's good and bad, right? Because you also have to set the tone that, yes, this could be a relief rally and there could be another pullback. And I think that's part of the messaging that we have with, internally in the office when we're talking to clients is we might not be out of the woods yet, so to speak. Yes, this is great. We've had a little bit of a bounce back from the bottoms in June. All three, averages have kind of seen an uptick, but you want to make sure that you're not changing your risk tolerance or doing anything that you wouldn't normally do just because we've seen some type of rally.
Gotcha. That makes sense. You know what you should do with that blank space behind you, by the way? That's back by the window. You should just cut out pictures of like Jerome Powell, maybe Warren Buffett, maybe Siegel.
You just get up.
And also Howard Marks. You should put Howard Marks back there too. I think it'd be fun. You'd have little like faces of people we talk about back there. And they're probably watching this anyway, but at least they see their face on screen. And this is where they get most of their insights from, the Fed.
Yeah, I think I'll do that once we hit 10 subscribers on YouTube.
We said high benchmarks here. Let's be maybe we should be more conservative. Let's say 7.5. So when we hit 8, we're good. I'll put it behind here. I'll put it right next to my daughter's, right below. My daughter's drawings go first, but then we'll put it below there. Or a mannequin on the chair with Howard Marks' face on it. Speaking of, he has no idea what's going on either. He's one of the brightest minds ever, chairman or co-chairman of Oak Tree Capital. And I don't know, do you read his letters?
I do not.
Ever? So good. I mean, it's not like it's not really specific to the strategy. They're never going to reveal the secret sauce. Their performance is just incredible. But it's very much anti-consensus is kind of their view. But there are times they say that the consensus can be right. And they're not saying that about now, but in the least most recent letter, he's got a podcast too. Probably more than 10 subscribers, I'd say. But it's he said recently that he was asked about, he was kind of pushed on what happens next, where does this go, and he said he has no idea. Like he is anti-consensus in saying that he has no idea. He's not one of the folks that is going to make a claim at this point in time. I should tell you enough that things are just so odd or weird that even the brightest minds are saying they have no idea what's going on. And from a risk perspective, that means that he's fairly balanced. He's not being overly aggressive or overly cautious at this moment because there's no meaningful momentum either way. So that piqued my interest whenever somebody that smart and that successful shares something in common. Like you have no idea what's going on with this economic environment.
I feel like, and you've said it a lot with just, there's so many economic data points that are just so screwed up from COVID that after effect is still kind of going through the economy to this day, 2 years later. And it's just throwing things off. And that's why you have folks like Howard Marks coming out and saying they have no clue where things are going to head from here. Yeah.
So they're sticking to their guns, their fundamentals, which are probably better than most people's because they've got quite a skilled team over there. But he has a cool quote that I like, which is the bus stop quote, which is if you wait at a bus stop long enough, you'll eventually catch a bus. But if you run from bus stop to bus stop, you might never catch a bus. Point being that staying invested is a better decision than trying to catch the next wave or avoid the next drawdown. It's just a weird environment, and that's been my conversation with some of our clients. It's just, look, this is just strange, and if anyone tells you that they know what's going to happen next, it's an outright lie. or they fool themselves to thinking they know what's going to happen next. There's just no way of knowing. And then the other problem is that if someone was right, let's say they said that, inflation was going to peak in June and, there was going to be a bounce back in the market. They were right accidentally, I would argue, because there's no way of foreseeing some of this data coming out, negative GDP and in lockstep with rising rates. It's just all over the board. I always think it's a dangerous time for investors because they're seeking those answers from people, and there's always plenty of people out there willing to give them. One of our letters, I think I recently wrote that to clients, was that the uncertainty of the markets is directly proportionate to the amount of people that say with certainty they know what happens next. So it becomes like all these talking heads at you that think they know what's going to happen, and the reality is nobody knows. And don't you? And I would argue now more than ever.
Yeah, I was just going to that point. I was just going to say, don't you think like when there's times of uncertainty, that's where these types of people, they just multiply and they come out of the woodwork and they have these predictions and conviction that so and so this is going to happen and this is going to be the effect of that. And there's just so many folks that come out in times like this because they know that there's a lot of different investors, people wanting advice or guidance. And unfortunately, it's not always good advice. And people follow it because they're confident and it sounds right and it's something they want to believe to be right. But usually the fundamentals and the basics are the best way to go about remaining invested, staying diversified, staying true to your risk tolerance, so on and so forth.
Let's say you're the program director of CNBC, right? I was going to say the CEO. I think the CEO is Jeff Shell or something like that. But if you're the program director of CNBC, what do? You can't have a dozen people coming on there saying, I don't know, which is the correct response, by the way. You got to find people with strong opinions. Otherwise, you get no ratings. And so then you have no advertisers, and then your channel's gone. And you got to think like the people coming on, it's free advertising for their business or their line of work. Like what most of them are advisors. Yeah.
Or, it's free advertising. And if they're right, it's a chance to just gain a huge following all at once. If they get airtime and they have it's just reach to the type of people that they want to be in front of. And if they can be right one time, that's really all it takes.
I would actually say that they're pandering to the wrong audience. Like the reality is, and look, we have clients that watch CNBC and we have it on the office here occasionally, but the folks that are watching, saying tuned in 24/7 to what the markets are doing or might do or not doing or whatever, or the economic data that's coming out, are not really the ideal client type, right? You don't want to work with folks that are going to be so emotional or tuned in day to day because it's going to drive them crazy and ultimately you crazy. I think they use it as a platform to say, hey, to current clients, hey, I'm on TV, right? Here's I'm smart. Look at me talking on CNBC. And there are smart people on the channel. I mean, I don't want to discount that.
You were just starting to say Josh Brown.
So I think he's one of the guys Josh Brown's one of the guys that does a pretty good job of being uncertain and saying that. But he's the balance to other folks saying, with certainty what happens next.
Yeah, I like Josh Brown a lot. He's pretty aggressive in going after people with views that are very certain in one way or the other. And like to your point, he's okay with saying, I have no clue what's going to happen next, but historically speaking, and then he'll lay out like 10 historical data points and saying, this could be different, but this is usually how it works. But still saying, I have no clue where the market's going to go from here.
And he's got longer hair now, so that's shout out to Josh Brown's hair.
I did notice that the other day.
It looks good.
It's like parted in the middle. What's going on with that?
I don't know. It looks good. Yeah, sometimes you got to make changes, right? You got the summer wave going up there. Anyway.
I guess so. Hope it works out for him.
All right. So I said this so many times, like on social media posts, but this is not a recession. Like we're not in one. I don't know what to call it, but you have 2 negative quarters of GDP. It's not the definition, by the way, of a recession. But you've got full employment. In fact, the jobs last month in July were way above consensus, right? So I don't know. I don't know what this is. Again, it comes back to everything that's kind of screwed up from COVID. I mean, what do you take away from all this?
From the fact that we are
negative GDP,
2 negative quarters of GDP.
Yeah,
you're raising rates instead of cutting rates. Payrolls are up. You have almost full employment. I'm in the camp that says this is not a recession, even though technically some might argue that 2 negative quarters constitutes a recession. It's just, I don't believe you can have a recession with this tight of a labor market. And we've talked about this internally, but the unemployment rate would almost have to double from here for it to be a typical recession, historically speaking.
We'll show a chart too. But we have a chart on here from the Federal Reserve or Bank of Dallas, I think it is. But it's a great chart because it shows every recessionary time frame, and the midpoint or the zero on the graph is the start of the negative GDP. So whatever date that was, in this case it would be January 1st. So for beginning of the quarter. And then it's in red on there is 2022. So it's showing that this is the outlier by so many, by leaps and bounds, that both payroll is increasing, right? So employment, to your point, is higher from the beginning of the year, and industrial production is up in that time frame. Now, what I would argue is that what also is strange is that there's this big adjustment happening as a result of COVID on training employees. Did we talk about this in the last podcast? I don't think we did.
I don't think so. No.
The Delta CEO, if you read through his earnings statement, they had to lay off like 75% of their staff back when COVID hit for obvious reasons. There was nobody flying anywhere or traveling at all. And then they have to hire. I think they've hired 85% of people back at this point, right? But they're not the same people. So a lot of those folks went out and got different jobs, or decided that was the time to retire or whatever it was. But now they have to train all these new people. So there's this training lag going on. It might explain a little bit why GDP is negative and unemployment's higher. And he called it a productivity bubble. Like we have all these people that aren't actually adding to the bottom line, adding revenue to the company just yet, but they're being paid as if they're adding revenue. And so maybe this gets through, I don't know if it's the case or not, but maybe at some point revenue, GDP, right, income or revenue, catches up to the labor numbers. That would be the positive spin on things, right?
And they're not like if we're talking about Delta specifically, if they're not adding to revenue, is that because like specifically they're not active pilots? Is that what he's talking about? So they're not flying more planes, which is having more customers fly with Delta. Like what is?
I mean, yeah. So not flying planes, not helping with tickets, not dealing with baggage. They can't fly as many planes right now. That's why airports are a mess, right? And
so in his case, like who are they hiring? That's not adding to the bottom line. Is it like pilots in training that they're hiring? Or? I
don't know if it's necessarily pilots. I think it might be more of the supporting cast. But you can't just become a baggage handler. I know it, but there's training to that. So they can't just put them on the tarmac the next day. But they're still paying them. They're paying them to be trained, and so it impacts revenue. I'm just wondering if that, especially in the hospitality industry, they were the ones that laid off the largest percentage of employees and now have to hire all these folks back as people continue to travel, that there's just going to be a lag in productivity. So that I posed that question to somebody on Twitter, and nobody reads my tweets, so that's the downside of all this.
That's not true. I actually get push notifications of all your tweets for whatever reason.
I appreciate that you haven't tried to change that. So,
I mean, I'm getting things on my Sunday afternoon of you asking why you ever ate oysters. So it's always good to get the Jake updates.
What was my last one? I can't remember what it was. It was something stupid. Oh, it was about filling up my yacht. He said, gas prices are through the roof. It cost $100,000 to fill up my yacht. He said, but at least I have a Tesla that saves me money on the way to the marina. I did get some likes in there. I will say there were a couple people that actually read that, liked it. You know what I get responses on? I was fighting with somebody about, actually golf fighting. I think it's funny. I laugh about it. But somebody was so upset that Kevin Durant, I know we're going to talk about this, but I got to mention it now that we're talking about Twitter. Someone was talking about how that Brooklyn should just benched Kevin Durant and not let him play. And I was like, it was so foolish on so many levels that the players have all the power in the NBA. Owners have none. But the owners have to sell tickets. So they have to trade him to maximize the value and then put seats in the stands. The guy's like, well, no, you have the lever. And I was like, oh my God, this guy is. So people, I don't know.
People forget they're companies too, and they're all about their bottom line.
Right, exactly.
So even though they're a sports team you root for, they're still a business that cares about their bottom line. I know we'll get to that, but just a question for you is, do you think if a lot of these companies in hospitality could go back in time, instead of furloughing or laying off, you said 75% was your example of, in Delta's case, of their staff, do you think they would, like, if they could go backwards, not lay off at nearly as many, maybe 30 or 40%? Or did they have to do that at that point in time to get through the initial wave of the pandemic?
I think it's hindsight's 2020, right? We know the pandemic from we had the vaccines and we figured out how to therapeutics for it and how to treat it and how to isolate and all that stuff. But none of that was there, remember, back when it started. So they have to. There's always going to be an overreaction with any of this stuff. And if you're a company, you got to protect your shareholders. And so the one way to do that, the only way to affect that in an environment like that, is to trim labor or lay off people. I don't know. I mean, hindsight, they probably would have tried to keep that on, knowing that they have to play catch up now from a training perspective. But I can't imagine that they could have made a different decision at that point. What do you think?
Yeah. No, that's kind of where I was going with it. I agree with you. It's like, hindsight's 2020, but I guess there had to be an overreaction because you do have to protect your shareholders. Like, they are, extremely important as a CEO. You want to make sure that you're protecting the shareholders at all costs, even if it means trimming your staff 75%. And I think the big variable was, we didn't know vaccines, when they would come out, if they would come out.
Right.
So I guess right when those were approved, you're going, as an airline, oh, shoot, maybe we shouldn't have laid off as many people because the return to travel is going to bounce back. And then you're scrambling to hire more folks. So
it comes down to me. It comes down to a decision of are we either going to go out of business, which is try to keep as many people on as possible, which probably going to drive you into the ground, or do we try to play catch up on the back end of this and still be a business, right? And airlines are so sensitive to, just to consumer spending, but energy costs and all that stuff, and that they had that double whammy, and with higher gas prices earlier this year. I mean, it's just a tough job to be a CEO and in that environment. Your job is to survive, just like all of us, only as a company level, and then play catch up after the fact.
Yeah.
So this will be our personal finance section, right? Do you want to kick this off or no?
Yeah, talking about individual stocks and why you shouldn't do them.
Well, you can, right? We're not saying never buy a stock.
Yeah, just to, you got to understand what you're getting into. And I invest in individual stocks knowing that, kind of like we both know, we may not outperform over the long run. We're just taking on a lot more risk. Hopefully the companies that we choose are high conviction companies that we have a lot of faith in. But I think the stats, and you kind of broke this down, where over the last 5 years, the S&P rose 112%. Half of that gain was generated from just 22 of the underlying 500 companies. And then going one layer beyond that is 92 companies made up 3/4 of the return of the S&P. So to say it another way, 5% of companies produced 50% of the return. 18% of companies produce 75% of the return.
It's wild. So yeah, one of the points was, well, then just invest in the index is the easiest way. You've guaranteed yourself to have purchased those companies if you own the entire index. So you never miss the top performing companies. Now, if Apple's up 300% and the S&P is up 112, right? You would have been a better decision to buy Apple alone. But how would you have ever known that back then, right? And I think this is part of the information overload that people have that has screwed over individual investors, or made them believe that they can be stock pickers over time, right? The story of what if I had invested $10 in Amazon back in whatever it was, 1998, or what if I put $1,000 into Apple back in the beginning? We had a client that did that, by the way. And I call it financial porn. It's like, right, what if? But that's the exception. The only way to participate in Amazons and the Apples at the next high performers in the market is to buy the index, right? And individual investors by far underperform the index because they let their emotions get involved in when they sell or when they buy, and very rarely do they hold for the long term. I think I look back, it was like the average individual investor annual return has been like 2%. Whereas the market's been S&P closer to 10. So all they had to do was just buy the S&P 500, an index fund, and hang out, right? But you get the news cycle, and you're inundated on Facebook and LinkedIn and CNBC or the evening news or whatever it is. Invitae was up 200% yesterday. I think it was down a lot today. But that stuff works its way into your psyche, and it's tough to ignore it. You think, I got to pick that. I want to pick that next great stock. How cool would it be if my $1,000 turned into $10,000? And it will. The irony is that $1,000 will turn into $10,000 eventually if you just buy an index and wait. And it's such boring advice, but sometimes boring. I think the best financial advice is oftentimes just boring.
Like if you just talk to people who are retiring and you ask them, the ones who have built up like a good retirement savings, usually a lot of them have been very boring strategies where they're just indexes for the last 30 years, 35 years, and they buy more during market downturns, and they don't change things based on where the market is at that current time. And that's because they understand the risk tolerance, they understand their time horizon. But if I did, to your point, when you're talking about social media platforms, I think there's a few factors, and I just my hypothesis, personal opinion. I think that we're going to see more and more folks starting to invest in individual stocks, which we already have started to see that shift. A couple of things. It's the speed and availability of information. Number two would be the accessibility component. Usually, it's so easy with platforms like Robinhood, and you have like Acorns, which it saves extra money and then it puts money into investments for you. Now those are indexes, but there's so many different platforms emerging now that it's just so easy to set up a brokerage account and start trading individual stocks. It's the simplicity in which it's done is, I think, going to cause more people, and that coupled with the fact that you have all this information, and usually the boring information, like we just said, if the index is over time, you'll get there. That's the type of stuff that doesn't get pushed. It doesn't get likes on social media. But then you have these different platforms and forums like a Reddit or an Instagram or a TikTok, where it's pushing these get rich overnight type stock ideas. And that's just the kind of the backdrop for a lot of these younger individuals, where that's where they come in and they're inundated with this information, and they're seeing that day after day after day of these people making these massive fortunes, whether it's crypto or individual stocks or high growth names. Like, it's just everywhere.
Yeah. And that was in back, 20 years ago, or maybe longer, when I was right about starting, you didn't have that. So you didn't have the guy spouting off on, Twitter saying, I invested $1,000, now it's $1 million. You couldn't see it. So it didn't work its way through the cracks. Therefore, you weren't as likely to make that same decision. Usually you invest $1,000 like that, and you're probably going to be at zero at some point. So it's it's boring advice, but it's the right advice for the vast majority of people. Howard Marks, going back to him, says all the time in his newsletters that in order to be, if you want to outperform, you have to be contrarian, have courage, and be really, really smart, right? I mean, you have to dedicate a lot of time to this. So the question is, are you going to invest in whatever stock it is after it's fallen 80%, right? And everybody is saying that the economy is going into recession. Are you really going to part with that $1,000 or whatever the amount of money is in that environment? It's so difficult to make that. It's easy to say now, I would unemotionally put money into the market at that point, but it's so difficult to initially make that decision. So having the courage, and you have to be smarter than other people, right? In order to be a winner as a stock picker in this environment, you have to be picking stocks where that value isn't already priced in, right? That's the stock market. Okay, so some things are disconnected. There's a disconnect for some reason, for whatever reason. That one particular stock is discounted. That's the exception, though. It's not the norm. It's the vast majority of stocks are properly priced. I would say this year there's two stocks that, because of the sell-off, got pulled down, and they would have been really good investing opportunities. I'm not making individual stock advice, but I'm just saying here's an example of that. It was Amazon down 45% this year. 45%, like one of the best companies in the world.
That's unbelievable.
45%. Apple was down almost 30% this year, and they just had the best quarter ever of their entire existence this past quarter. That was a disconnect, right? But would you have had the fortitude to put money into Amazon thinking, oh my gosh, this could go down another 20%? It's tough. The only way to ensure that you're going to be part of own those companies and not have an awful outcome is through an index. It's boring, but it's the truth. And I said on my post, like, I own individual stocks, but I'm probably going to underperform over time. I hope not. I hope I have time, and we sit here in front of the market all day, and so we have a little more time. But most people don't. Anyway, I think it's good advice for the average investor with that just is saving for their future, is just pick an index and stick with it, right? Or pick a fund of funds that's diversified and stick with it. And you'll be much better off than the vast majority who are earning 2% per year.
And how many times do you get approached by people in your circles who kind of know what you do for a living, and they want to do the same thing that you're doing, but we sit here all day and not saying that we're going to be right more than they would, because it's really just a guessing game.
Yeah.
But we have a lot more time to look into that type of stuff. And, in most cases, my advice, I'm sure yours is too, it's boring, it's repetitive, but it's generally going to be good advice over the long run.
Right. And remember that every trade made is a zero-sum trade. The person who bought that stock and the person who sold that stock is a zero-sum game. They miss out on the return if it goes up, and they make the return, right? So it's always a zero-sum game. It depends on how often you're right, and it's really difficult to be a market timer in this environment. I do change my mind a little bit on individual stocks if you know it's a good company and you're willing to stick with it for the next 5-10 years, right? But even that is tough to do. Going back to financial report, this is the last thing I'll say about it, is you put $1,000 in Apple stock. We had a client that did this. They still own it today. And it was, we started to carve out a little bit of it from a diversification standpoint, but they held it until it was worth like almost $2 million. So the crazy part about that is, look, it's easy to buy stock, but never selling it is just the most unfathomable thing to me. When they were at 10,000, they 10x their money. They didn't sell. When they were at 100,000, they were 100x their money. They didn't sell. They were at 1 million. I mean, it's just like, it's not selling is the fascinating part to me. That's the hard part. That's another part of being an individual stock investor is, do you have the fortitude to ride it through all those awful waves? And that's a whole different conversation.
You think we transition off that back into the Kevin Durant news to close out here?
We have best practices, financial planning. You don't want to do that? Or we want to skip it?
Yeah.
Whatever you want to do.
Why don't you do that? Go into that.
Well, I just thought it's good to have like a financial planning as an advisor, right? That some good practices to have. We won't spend a lot of time on this, but I thought it's worth mentioning that I think especially young advisors, I'm not picking on you because you're younger than me, but I think young advisors, you're armed with all this new knowledge, right? You've gone through the training, maybe you started the CFP process, and so you're armed with all this information, and you want to go out there and solve problems, right? You want to be the problem solver on behalf of your clients or friends or family or whoever. But I think a lot of times younger advisors are trying to find the problem so they can take their tool and apply it to that problem. And they'll sometimes assign problems to people that don't have them or don't care about them, right? So it goes back to what we talk about a lot, which is listening is more important than solving the problem right then and there, right? The Science of Storytelling, we've talked about that book before, talks about how you're the hero in your own story. It's going to be that way. And so you have to be active in separating yourself from that in a client interaction. They're now the hero of your story. So you've got to act like that whatever they're saying is most important and believe it. And then try to listen for what the problem is, if anything. Maybe there is no problem, right? So sometimes a client interaction is there is no resolution. It's just a conversation and it's just listening. And it's not saying you have to do a Roth conversion or, or change your saving strategy or anything like that. So I thought some good advice just over my 20 years of doing this is I still catch myself falling into this trap is just not searching out the problem. Right.
Yeah. I think we all do that to a certain degree, more so younger in our careers, like myself. I think just being with you and working with you every day, I've tried to move out of that and hopefully have moved out of that since I've been, working here for a few years now. But certainly, like I worked at a larger firm where they equip you with all this knowledge and, that you go through all the trainings and you get licensed and you come out and you're young. Part of you wants to cover up your age to a certain degree and show how much you know. But you're right. And what I've learned in my, 7-8 years at this point, that most client meetings, when I come out thinking that meeting went really well, it's when I talked the least and listened the most. And generally it's because people like to talk. They feel good about a meeting when they talk a lot. And it's almost like they're venting their anxieties about whatever it is, purchasing a house or retirement or taking that next step into that next phase of their life. And just kind of talking it out with somebody that you can kind of gain that, rapport and build trust with. And you really just start to get a good feeling. And that's usually where we come in clients' lives is when they're making a big decision, whether it's, starting a family or buying a house or retiring. That's where we add a lot of value. So I'd agree with you. We're all kind of fall into that trap sometimes, younger advisors more than others, but it's something that we're always trying to work on as an advisor, and really in any industry or sales where you're just wanting to be a more active listener.
Yeah, that's a good point. I think a good challenge would be, if you're married, for example, go home and just ask questions for the first 15 minutes. Don't offer solutions. Don't offer advice. Don't, it could be, we get questions all the time from clients. Yeah, should I be doing this? And you say right back, what do you think? You've given it some thought. What do you think? What do you think is best for you? And then it's people like to talk, to your point. So they're going to open up about that before you even giving advice. Sometimes you can't avoid it, right? You have to answer the question. I'm not saying that, but go home and try to be the question asker for 15 minutes straight. And odds are that person's going to appreciate it, right? And then actively listen and ask questions that are involve the conversation, right? Not just don't ask a brand new question, but actively listen and ask something about it. And it'll lead you in this really weird way too. You might end up talking about something you never even thought you'd be talking about in that 15-minute span. It's quite interesting. I still have to work on it. I'm not by any means an expert at it.
Yeah, we all do.
Yeah. Okay. By the way, I read a book recently, and I figured I'd talk about it. I try to read as much. It happens like in a very small window right before bed. It's my only time to read. Otherwise, there's kids running around me. But the Humans by Matt Haig. We'll put a copy of the book or a link of it to Amazon. And it was really good. It's about, I'll set the premise of it, right? It's about this guy. It's about that this human, right? This person solved this problem, mathematical problem. And this other alien species knows that by the humans knowing what that problem is, that the humans would be dangerous with that technology, with that mathematical knowledge, right? And so they come down and they intervene. They kill this guy and they consume his body. It sounds science fiction, but it's not. But what's really interesting about it is the observations the alien, right, makes about humans throughout the entire book. He starts off by saying, first of all, he's confused why he's naked and people are looking at him. Why do we wear clothes every day? That sort of thing. Or why do we have protrusions on our face like a nose? It's just an odd thing for them to say. Anyway, but it goes into depth on what the human experience is, and it ends up being this list of like 100 different ways to live, in essence. But to me, it was really eye-opening. It was really, really good that we get caught up in things as humans day to day that are so meaningless in the grand scheme of things. So I would highly recommend it. It's just really, really good. And I read it pretty quickly. It's a pretty quick read. So I wasn't familiar with Matt Haig, but I'm going to read all his stuff. He's a really good writer too.
Awesome.
Thoughts?
It's interesting.
Get you a copy.
I think that we, as humans, we always do get caught up in a lot of. I was just talking about this with, I forget who, but there's so many meaningless things that we get caught up in the day to day when looking at like the bigger picture of just most things. They just waste your time with certain things. You stress about certain things or get anxiety about certain things that you really, when you take a step back, you really shouldn't. So I haven't read the book. I don't know if that's what it goes into, but sounds something similar to what I was just talking about with somebody not too long ago.
I just finished a show. Did we talk about this last time? The Old Man?
I don't think so.
On FX?
We did.
Hulu?
I don't remember.
It was that's my new favorite show. Well, I already watched the whole season. My wife and I did. It's Jeff Daniels. No, Jeff Daniels. Who the heck is it? I'm going to forget his name. I forget. It's this ex-CIA operative. I forget the actors' names. Hold on, I'm going to look it up while we're sitting here. Ex-CIA operatives who, like 40 years later, they had the one guy's got to track the other guy down, and it's just really good. Jeff Bridges, I was right. Okay, and John Lithgow.
Yeah,
it's a really good show. So I feel like TV's been kind of just okay through COVID. And this to me was like the comeback. So I would recommend that. And then we're watching Kevin Durant trade rumors too.
Yeah, what do you think's going to happen?
I don't know.
It seems like he's buddy with James Harden. They were in London at a Travis Scott performance. Seems like they're communicating and traveling together. And, even though the funny thing about it is Kevin Durant and Embiid always go pretty intense head to head. But then he comes out and says like Embiid is like should win MVP, and he really starts to back all this stuff like in the media of Embiid. So it doesn't show it on the court, but they're just two fierce competitors. But I think the pairing of Harden, Embiid, and KD would be, is a thing. You'd probably have to give up Maxey.
Cool. I'm cool with it.
Tobias,
cool with it.
Thibault, Niang, and Picks.
Niang.
I mean, I don't even know if they'd want Niang, but you almost have to ask him to take him after that playoff performance.
He's not going to play at all next year if he's on this team. Is he even on the roster?
It's tough to give up Maxey. I'll tell you that.
You wouldn't give up Maxey for let's say it was Donovan Mitchell or something. Good player.
Yeah.
Not like a superstar on the level of Kevin Durant. Kevin Durant, you give up Maxey. You give them whatever they want. You just say we will match whatever package you get offered, and then some. Why not? This is the window for Joel Embiid, right? He's How old is he now? I don't even know how old he is.
28.
And he's a center. So centers don't play as long.
Yeah.
So
probably got 3-4 years.
Yeah. I think we need to capitalize now. If you have that option, well, first of all, we know that what's his face, the GM. I can't remember his name. Hinkie. No, yeah. Is it Hinkie?
No, not same.
Oh yeah, that's right. That was the old GM. Morey. My gosh, Daryl Morey. He'll be on the phone. You know that he's involved, so that's comforting.
I mean, he's been on the phone, is what the reports say.
Yeah.
So I also saw a report that for the Celtics they were asking for Jaylen Brown and Jason Tatum, which is just ridiculous. Like you're just never.
Well, why not? Right in the beginning, you can kind of do that.
I guess if it's part of a negotiation, but it's like you're not really trying to trade him if you're coming out with something like that.
I'm seeing now that they say he's still close to James Harden, would like to play with Joel Embiid. He's told but may not have enough of what Brooklyn is looking for in a trade. That was John Clark saying that.
But like, how much leverage do they have if he's not going to play for them? Their leverage starts to diminish.
I know. Well, Embiid's made it clear to management he wants them to exhaust every option in trying to acquire Durant. Yeah,
we'll see. It's gonna be a fun off season till October.
Yeah.
So another 2.5 months.
I'm reading tweets here. Anyway, it's gone on a long time, hasn't it?
Yep.
All right, cool. Anything else on your mind?
That's it for me. Hopefully we get Kevin Durant sooner rather than later.
Summer threads today.
Yeah, I noticed.
Yeah, this feels good. Nice lightweight.
Yeah, maybe
this hot weather.
Maybe I'll do it next episode. We'll see.
All right, sounds good.